Question, call us now at 855-RR-ON-147. That's 855-776-6147 to reach our studio. Now, here's your host.
All right, welcome into Commodity Wrap Call-In. All right, 855-776-6147. I'm Scott Shelley, otherwise known as the Cow Guy. Again, 1-855-776-6147. Give us a bell. Tell us what you want to talk about. We're going to kick the show off with our guest analyst. He's our Friday morning guest analyst, and that's going to be Mr. Craig Bolanos. Craig, thanks for being on the show.
Hey, fantastic Friday. Good to be with you. Love the call-in show each week. And listen, am I supposed to believe the president or do I believe the Treasury Secretary when it comes to these tariffs? I don't know. I'm biting my nails. We'll see what happens sometime today or when I wake up tomorrow on February 1st.
What did the Treasury Secretary say?
Well, he took a much more measured approach where he said, hey, we'll start with gradual tariffs at 2.5% and scale up. So I'm hoping that between the appointed Treasury Secretary and the president, maybe it's just a decimal point that's in the wrong spot, 25% versus 2.5%.
2.5% almost isn't worth doing. But, I mean, what are your thoughts if these things go through? I mean, we tick over the clock and we show up Monday morning and the 25% has gone in.
Well, the first thing I'm thinking is, boy, all those container ships rush into the United States. I hope they make it to the ports in time. My second comment is, no, if you went straight – now, I like to carve out that the president said in his press conference from the Oval Office yesterday that, hey, I'm thinking about not attaching it to oil. Good, because we do get a lot of oil from the Canadians to the north. That wouldn't be good for gas prices for anybody. But if we went straight from where we're at today to 25%, no, I'm getting nervous because that's going to have a shock, especially to the auto industry. I mean, we treat North America in the auto industry as if it's one big country, not three separate countries. So this is real.
Yeah, we just had a meeting here about what we think is going to happen, and they had the CEO of Chevron on this morning on Fox, and he doesn't know what's going to happen. And I say this: if I don't know what the conditions are, like I don't know what these people have to meet, what levels do they, what are the metrics that they have to meet to have these things taken off? Does anybody know? And I don't think he's ever said anything, and I don't think he wants to, because then it takes a little bit of his leverage away. So I think it's like how long is a piece of string on what Mexico and Canada have? What do they have to do to get the tariffs to be taken away?
No, I mean, all of that is true. I don't know how you're going to count human trafficking. I don't know how you're going to count immigration, and I certainly don't know how you're going to count pounds of fentanyl. But here's what I do know. As goes Apple, sometimes goes the market, and at least we were reassured yesterday that the world is not yet coming to an end, as it looks like this market's going to open up in green. And thankfully, we've had some good numbers in some of the tech companies, although certainly not as robust as I would have liked to close out the fourth quarter, but at least there's some positive momentum on that side of the trade for the market rally to continue to close out the month of January and hopefully eke into February.
So Apple reported yesterday, I'm taking it.
Yeah, they came in after the bell, and you know what? Their service revenue was strong, and people can argue about whether they're evolving or not evolving or this or that, but it doesn't deny that their various verticals in the ecosystem of that company still remains profitable. I mean, everyone seems to be beating on the top side and the bottom side. That's not that hard these days, but the reality is it's all about the guidance, right? It's all about the guidance, and the guidance was not terrible.
All right, well, that's good to know, because I think the only market really to me that's showing anything tariff-related is gold. It's got a little bit of a bid, I think, because nobody knows what's going to happen, so they're running there in case the stock market falls out of bed or in case inflation takes off. I mean, it's kind of been a place to go hide here. It's like a tariff hiding place, at least. And that's what it feels like to me. Any points on that?
No, I think some of the commodities have been a tariff hiding place. I mean, gold specifically, a very, very traditional risk-off asset class. And, I said this last night in a couple of news outlets, and I repeat it to everyone this morning. No one needs to run out and buy a pair of sneakers. No one needs to run out today to Best Buy and go get a new iPhone. The reality is, I think the strong dollar, right? I mean, the dollar's at all-time highs. That's going to offset some of the pain, especially if these tariffs start at 2.5%, and then we slowly move the decimal to 25. So I think people should just make sure they're diversified, and 2025 might be the year for people to incorporate multi-asset classes, whether precious metals, commodities, because I think there is a super cycle that's going to happen in the rest of the world. And don't forget other forms of alts as a complement to your traditional S&P and fixed income.
All right, tell me if I'm wrong on this one. I feel like 2017 was a long time ago, 8 years really, but and the world has changed dramatically as far as what's been not more important, but what's been in the headlines. And there was a lot of ag in the headlines then, and ag was in the crosshairs when it came to these tariffs. I feel like this time around, even though he's starting with Canada and Mexico, I feel like the tariff war is going to be more of a tech war. It'll be more in the tech world rather than the ag world. What do you think?
I think it's going to be tech and industrial. It is going to be tech, industrial, auto, not so much agriculture. And why the shift? I don't know why the shift in sentiment, but it's definitively a shift. I do think the president really understands that we need to protect the American farmer, because if we don't protect those who feed us, the country comes to a stop literally overnight. But why the shift in the lens? I can't tell you, but I do know this. If there's a race that I want to win, back in the day it was the space race. Today it is the AI race. Yep. And clearly with DeepSeek, whether they really spent $6 million or didn't spend $6 million, it's clear that we didn't have tough enough export controls.
Right.
And it gave some of our competitors a real lead-in to use our intellectual property potentially against us. That's not good. I don't think that'll happen anymore. But once you you leave the gate open, a couple of them escape. And sometimes that's too late.
Well, you can't get those horses back in the barn. All right. Great stuff as usual. Have a great weekend, Craig. It's awesome to have you on. Craig Bolanos. He's the co-founder and wealth manager at VestGen. We're going to go away. We're going to pay some bills. Guys, give us a call, 855-776-6147, 855-776-6147. We'll be right back right after this.